Dear friends, welcome to weekly view on markets. Markets continued their gains during this week and Nifty gained around 510 points for this week. Bank Nifty was leading the market. It rallied about 1714 points for the week. Mid and small cap sectors were volatile during this week, and we have seen the correction in the small cap index continuing during this week. FIIs have started buying. Last week they bought about 50 crores in equity. This week they have bought about 10,000 crores. So the FII interest in buying Indian equities has increased. They are putting money into the large cap stocks, and DIIs continue their investment as usual. Charts look quite strong at this point of time. There is no weakness on the charts, which indicate further rally in the markets, despite that the market is trading at a premium valuation. Investors need to pick their stock carefully because market is at trading at premium valuation, and they should be prepared to invest for the longer period of time. Let us look at the indices. Nifty has closed at 22,493, gained about 510 points. That is a gain of 2.32% for this week. Bank Nifty has closed at 47,835. That is a gain of 1,714 points. Mid-cap index has closed at 48,966, gained about 630 points. That is 1.30%. Small cap index corrected a little bit, down by 267 points, that is 1.67%, and closed at 15,700. India VIX has slightly cooled off. It is lost about 1.96 points, and it is at 13.61. Now let us look at sectoral performances. PSU banks gained the most. The banking sector was leading. In that, PSU banks gained around 5.94%. Metal sector rallied around 5.67%. Public sector stocks are in favor during this season. PSE index has gained more than 5%. Commodities gained about 4.17%. Energy sector, auto sector, manufacturing, private banks, infrastructure all gained more than 3%. NBFCs gained around 3%. Oil and gas around 2.71%. Consumer durables 2.29%. Only two sectors, that is media sector, continues to lose heavily. It lost last week around 5%. This week again it has lost around 3%. Information technology sector lost about 1.64%. Now let us look at charts. This is the daily chart of Nifty. Here we can see Nifty is following this long-term trend line, and as long as Nifty remains around this trend line and above this trend line, there is nothing to fear technically, and market is in the strong uptrend. Whenever it is dropping to the trend line, we can see buying is coming and market is picking up. That is why I call this market on a buy on dip market. Whenever a dip is there, it should be bought. From there, market takes supports and it goes up. This is the chart of Nifty Mid Cap Index. As we can see, it is moving in this channel. Whenever it is coming to the lower end of the channel, it is taking support and again going up, and the chart is making higher tops and higher bottoms. Here we can see for last 2 weeks bit of consolidation that is quite natural. So overall trend is up. So we'll see higher levels in the mid cap index. This is a chart of small cap index. Nifty small cap index has fallen below this crucial support line, and after that we can see one last green candle. So from here it is trying to come back into the channel. Whenever it drops below the channel, there is buying. So it will most probably next week it will move inside the channel. There will be some positive movement expected in the Nifty small cap index, and it is likely to move in this channel, uptrending channel, for some more time. This is the chart of Bank Nifty index. Bank Nifty has given a good rally during this week, and the next resistance zone for the Bank Nifty is at around 48,500 to 48,600 level. The rally in the Bank Nifty is likely to continue, and if it crosses 48,600, we will see very soon Bank Nifty touching 50,000. There is good momentum and positive bias in Bank Nifty index, and if there are corrections for 1 or 2 days, that is an excellent opportunity to buy Bank Nifty index for the traders. Now let us look at some of the market macroeconomic fundamentals. RBI governor was speaking at India Economic Conclave, and he has stated that the GDP growth for the current year, that is this year, will be exceeding the estimates, and it will be at around 8%. Also, he has predicted the next year estimate will be growth will be around 7%. So market is quite happy with this kind of statement coming from RBI governor, who will always speak based on the facts and figures and statistics. So we have seen good rally after the RBI governor's statement. Forex reserves are going up and touching higher levels. It is at 625.6 billion US dollars for this week. That shows the strength of Indian economy. Forex rate is at 82.79 rupees per dollar. Dollar index is at 102.79. Rupee dollar rate seems to be quite stable for past several months. This is good for Indian economy, shows the stability of the Indian economy. Brent crude price is at 81.51 per barrel. This is one area I am slightly worried because of the situation in the Red Sea and attacks on cargo vessels from the Houthis. So it depends how this situation develops further. That will may have an impact on the crude prices. Gold price has seen lot of demand, and the gold demand is there, and price has gone up. It is at 65,382 for 10 gram 24 carat. For the first time, gold has crossed 65,000. There is a lot of demand seen in the gold. FIIs have bought at around 9,812 crore in equity this week. DIS continues to buy 10,127 crore in equity during this week. Now that is why we see good rally in the market, and now the rally has shifted in favor of large cap stocks. Money is coming into the large cap stock. Markets are trading at a premium valuation. The valuation is not cheap for the market. So investors need to choose quality good stocks. They also need to increase their investment horizon. They need to invest for longer period of time. They should be aware of the risk to the market at this premium valuation. But still, I advise investors to buy on corrections. It is a buy on dip market. Use correction to buy good quality stocks. Mutual fund investors should not worry about volatility. They should continue to invest through SIPs to get good returns because the Indian economic fundamentals are quite strong and GDP growth is expected to be going higher. That will give good opportunity for mutual fund investors to get good returns if they invest through SIPs and remain invested for longer period of time. This is all for this week. If you like my video, please subscribe to my channel. You can share with your friends. You can ask your questions, which I will reply. We will meet again next week. Thank you.